I'm Vin Solo from INSART Fintech Business Accelerator. And this is the Guts, Grit, and the Fintech Podcast. So this is the show for founders, investors, and entrepreneurs who are not afraid to take smart risks to ship the real products and build the brighter financial future. And our today's guest is Martin Walker. So Martin is a principal at Curql, and he is specifically focused on investing in fintechs that enable credit unions. So Martin, hello, and nice to see you here.
Hey, it's great to see you. Always fun to hang out with you.
Absolutely. So Martin, my very first question. So you are very focused on investing in fintech startups who enable credit unions. And why credit unions?
Yeah, it's a great question. To answer that, we have to take it back a few years to the beginnings of Curql. And basically, it was born out of an ecosystem, a group of credit unions who were spending a lot of time as part of an organization that was doing a lot of research around fintech, helping credit unions do bulk buys and bulk negotiation of fintech contracts. And in some cases, these credit unions were making one-off investments in some of the fintech companies, but this isn't something they do as their full-time job. They weren't necessarily investing at the levels that would give them a lot of impact on those companies. And so those credit unions looked at over at the banks, where you've got a lot of bank-backed strategic investment funds, and said, well, we should do the same thing. And that's how Curql was born. So a group of credit unions got together, started this organization, and ultimately launched the first Curql fund about 4.5 years ago. We invested in 29 companies out of Fund 1, and we've recently closed Curql Fund 2, and we're now doing it all over again. And we're trying to give credit unions a seat at the table to really partner with these fintechs in a meaningful way to help them understand how to best serve credit unions and their members.
Absolutely. So, Martin, recently I have been to Finovate conference, and typically there are a lot of fintech startups who are actually selling to banks, to credit unions, to some other financial organizations. But what I have seen this year is that a lot of them are now focused not on the consumer applications, but basically on the infrastructure. So code generators to cut integrations time. So some startup presented that they can cut the time for integrating 90%. Okay, producing production-ready SDKs in seconds. So also some of them taking broader approach, but enabling banks to launch lending products or fintech partnerships in days instead of quarters or months. And it looks like it's a huge trend. And also CB Insight notes about just recently Plaid raised more than 500 millions last quarter. So basically, implication is infrastructure is no longer a plumber and plumbing, and its power, and the players who control integration, APIs, orchestration looks like they will dominate the ecosystem. Mm-hmm. So basically, what is your take on that? So do you see the similar trend in your portfolio? Is infrastructure is a new kin, or consumer applications, they still relevant?
We are seeing, I'll call it the platformification of the space. I think over the last several years, what we saw was a proliferation of point solutions, and a lot of those were member-facing or consumer-facing point solutions. Now what we're seeing with credit unions, and especially with their technology leaders, is they're looking to consolidate the number of partners that they're managing. Instead of saying, I've got 200, 300, 500 different technology partners that I have to keep track of and put all that together. If I have these larger platforms that have a lot of infrastructure, built under the hood, then I can accomplish bigger and better things with far fewer partners, and it's a less complicated ecosystem for me to manage. So we're absolutely seeing that, and we're also just seeing with technology that with some of these infrastructure plays, to your point, it makes it easy for these financial institutions to build and present new products to their members and their consumers much more efficiently than before. You don't have to wait around for an entire company to be built around a product. If you have the right platform underneath, you can launch that product. I mean, you can build it in a day and then just put the marketing and the go-to-market around it and launch it pretty quickly.
So at Curql, do you help startups to get introduced to the credit unions who actually back the Curql?
Yeah, absolutely. We have an entire side of our organization, the Curql Collective, and their purpose is to get our fintech in front of our credit unions and our credit unions in front of our fintech each and every day. So whether that be through in-person events, bespoke events on site at different credit unions, virtual events like this, and one-on-one meetings, they're spending most of their time trying to help those credit unions and those fintechs find each other and kind of be the matchmaker, so to speak.
All right. Okay. So another trendy topic is actually AI. But again, what we're seeing on the market now, it's like AI is no longer like a differentiator. Okay. So basically everybody has to implement AI. But the question is how and what would be the most efficient use cases to apply generative AI and all kind of AI and ML. So basically my question is, what are the most trendy use cases that you are seeing among your portfolio companies right now?
Yeah, I'd say it's being leveraged in a few different ways. So on the member-facing side of the house, we're seeing nearly all of our portfolio companies have already deployed or are in the process of deploying some way to use generative AI as part of the platform. For example, rather than have a data platform that requires you to build out a SQL query to pull some data out and possibly create an audience that you send out a marketing campaign to, now they've layered on a chat GPT-like interface, and you can just tell the interface, I want to see all the members within this age group, within these zip codes, that doesn't have a mortgage with us, but has one somewhere else. And it'll deliver that list immediately. I don't have to go to the business intelligence team to go get that request fulfilled 2 weeks later. I can get that list right now. So generative AI is being used in a lot of different cases to essentially just ask the platform for what it is you want to have delivered. And that's cutting down not only time, but the number of hands that it has to go through. That person right in that business unit can get the data and the insights that they're trying to receive immediately instead of waiting for another department to deliver it. The other one that's really heated up a lot is agentic AI, and specifically as it relates to workflow efficiency. So back office automation and back office workflows. We're seeing quite a few companies right now that are solving those problems either horizontally across all departments within the organization or vertically being very focused on, let's say, lending automation, or perhaps automations in things like sanction screening, that sort of thing. So we're seeing a lot of efficiency, not necessarily taking the human all the way out of the loop, keeping a human in the loop, but having that AI agent do a lot of that kind of repetitive work and then freeing the human up just to validate that it was done correctly, to check exceptions, and to spend more time on the more difficult exceptions that kicked out of those workflows.
So I have just recently read from Morgan Stanley that by mid 2025, this year, like 73% of financial institutions had AI in production workflows, and comparing to 66 just in January. So like we're having this growth from like for half a year, from 66% to 73% of AI implementation in production. And back to your point about the different reporting tools. So we call it generative BI. Like, so now it's like generative business intelligence. Yeah. So, and this is huge. So we have examples like payment transactional data. So, and with the new tools, you can create queries just in real time, and you can tune your reports just in real time. So in wealth management, for example, different areas, they need reports in different formats. So you can create the templates also just from from other reports, not manually, but basically using generative BI tools. So that's why generative BI. I think it's really a great trend, and a lot of fintechs, as soon as they have transactional data, all types of transactional data, so now we can implement all kinds of reports much faster. All right. So let's get back to your investment strategy. So credit unions. So can you tell us a little bit more, like, what are the stages of startups that you're looking for? Are they more early stage, mid stage? And what are the, positive signals that you're looking for within this group of startups?
Yeah, absolutely. Our fund's about $360 million, and we're targeting somewhere in the neighborhood of 30 portfolio companies. So the math works out to $5 to $10 million initial investments into each company. That's usually going to place us Series A or later. So typically, what we're looking for is, companies we've established relationships with when they're fairly early. Watching them progress towards a point where we feel like they might be that Series A ready stage. And for us, there's two parts to that. One part, because we have a credit union strategy, is understanding what progress they're making within the credit union space. Have they started engaging with credit unions? Do they have any pilots? Do they have any POCs running? Have they signed any credit unions? That's a big signal for us. We're very good at helping fintechs sell to a lot of credit unions once they've figured out that there's a fit there and they've got a motion that's starting to show that it works. And then the second is just pure maturity. So, probably a company that's 1.5 to 2 million in ARR minimum. That's usually when they're going to be coming into our orbit where they'd be looking for the size of investment that we're making.
So Martin, working with a lot of startups, we're seeing that, especially at early stage, they are struggling to validate the demand. Okay, so maybe they would have a few pilots done or in progress. So from the investor perspective, what would be your advice specifically for the early stage founders who want to sell to credit unions? So what they should point their attention while pitching to the credit unions and while trying to secure additional pilots and additional early sales pipeline?
Yeah, I think the first thing is those founders really have to understand how their solution benefits credit unions. What is that product market fit within the credit union industry? Rather than showing up to sell a product, they really need to show up to solve a problem. or to capitalize on an opportunity. And once they feel like they've got a good sense of how they can really benefit credit unions, the key with credit unions is you need to get about 3 of them to do some sort of a pilot or a POC with you. You absolutely want the credit union to let you do a case study, make sure that you can publish that case study and use the credit union's name in it. In a perfect world, have them come up on stage at Finovate with you and be part of the presentation, because credit unions get really excited when they get to listen to other credit unions tell about how they've solved the same problem that they're facing today. Once you're able to do that, that's usually that first piece of momentum. Being able to show the rest of the industry, hey, we had a few early adopters, and they got some of the results that you would also be looking for. So just kind of showing that that's a value that they can bring across the industry, because credit unions all have a little bit different types of strategies, but there are certain common trends. For example, fraud prevention. Every credit union is trying to prevent fraud. Every bank is trying to prevent fraud. And one credit union might have a bigger problem in a particular fraud area than another, but overall, they tend to be facing some of the same challenges from some of the attackers out there.
So, Martin, can you tell us, to wrap up our conversation, what are the most pressing challenges and the most pressing problems that credit unions are trying to solve, but they still need a lot of innovation over there? In other words, like, what startups would be the most interesting for the credit unions right now?
So AI-enabled fraud is a major problem. Deep fakes, being able to defeat things like biometric security, those sorts of things. That's a real concern. So that's one area. Another area is just look at what's happening with generative AI in general and ChatGPT. The number of people that when they want to get an answer to a question, they go to ChatGPT maybe first before they go to Google, or they go to Google, but they look at the AI insights versus at the search results. In the credit union world, if you think about the experience, it's largely a digital experience today, and really that was exacerbated by COVID. So now credit unions who are so good at developing these relationships with their members have to find a way to develop those relationships digitally. And if they can deliver an experience that is more like the chat GPT or the AI-enabled experience that now their members are starting to see come at them in the other apps that they interact with, I think that's going to be a key way for them to stay relevant and to continue to have that relationship with their member, even though it's a digital relationship first, with that human interaction when those people want it.
Martin, thank you very much. It's a very valuable insights here. So, and thank you very much for joining us today. And I particularly like the specific use cases that you mentioned, like how to identify the deep fakes. What's next about like automating the workflows with agentic AI. So other use cases like generative BI. So these are very important to continue building the infrastructure for credit unions and the user experience. So thank you very much for joining us today.
Yeah, perfect. Thanks for having me. It was a pleasure.
Yeah, absolutely. And for everybody who are watching us today, for all the fintech entrepreneurs and builders, subscribe to our channel. Please like this video, share this video, and tell us what is your experience selling to the credit unions and what other use cases have you seen on the market. So it was me, Vince Solo from INSART, and Martin Volker from Curql. And let's keep building the fintech and brighter financial future together. Thank you and bye-bye.